Today is seriously a bad day for Napco Security shareholders. The stock fell by 28% after the earnings were posted, and the year-over-year performance is minus 38%. So it's really bad, okay? We have some bad news, some good news as well from the earning calls and the earning release. So today in this video, I'm going to comment what happened, comment what I heard, what I saw in the report, and see if it may be an opportunity to buy the stock, or if you need to stay away, or if you have some Napco stock, maybe you should consider selling it. So first thing first, growth. That's the main reason why the stock plunged like this. You have a minus almost 10% year-over-year revenue. Okay, so the net sales year-over-year is declining, and earning per share minus 17%. So we can as well say that, okay, the EPS grew by more than 40% in the last few years. So at some point it needs to go a bit down, it needs to calm down, but still it's very disappointing. The only good thing is the recurring service revenue, which increased by 14% during this quarter. So that shows that the business model of recurring revenue service is very good because they have better margin. They managed to have higher margin on those service from 90% to 91%. So it's very, very profitable, and they managed still to grow it. And the problem here is they don't expect 14%. They expect more around 20%. So this 14% is a bit disappointing for them, but it's still kind of a good news in a sense that it shows that they can manage to have more and more revenue from it. The reason for decline, okay, the main one is two distributors reduce their sales, okay? So one, because they had inventory reduction. So from the earning call, they say that this was for everybody. They had them on phone. They confirmed that this is not because of Napco. It has nothing to do with Napco. It's a business. We just want to reduce our inventory. We did the same with everybody. So no worries, like it should be better for the next quarters. And the second one is management restructuring. So the fact that they are restructuring the management is they needed more time to make some decision about what to buy and so on. So it affected Napco. To be fair, the way they talked about it during the earnings, I'm a bit skeptical about it in a sense that it stinks a bit, especially for the management restructuring one. Like, did they lose the confidence of the new management here? We will see in the next quarters, okay? But I'm not very confident about it. And the inventory reduction, same. Does it say that maybe a recession is starting in those fields? Okay, maybe the distributors start to have some problem, less demand, so they are expecting to, like, they want to decrease inventory to not have too much inventory that will not be sold. So this is a serious thing that we should consider, okay? They expect, in terms of growth for the RSR, so the recurring service revenue, to grow by 12.5%, 12.5% in Q3, okay? So the growth will continue to decline. We were more around 15-16% before now. It should decline in Q3 to 12.5%. But they expect for Q4 and the next year, thanks to the new radio installation that we'll see just after, they expect it then to grow by 20%. So we have go back a little to go better, to go more fast in the future. So this is what they expect. They seem very strong on it. So we will see how it goes for this. When it comes to margins, they have gross profit margin of 57% compared to 52.6% last quarter. So it's good growth. It got higher, obviously, because of the growth in recurring service revenue, which has 91% gross margin, which is better than last year, 90%. And of course, more revenue come from software and less from hardware. So of course, like the profit margin increased because of this. So the gross profit margin, don't get fooled by this because it's mostly because they have one segment of the business that grew, which is 90% gross margin. If you take this out, it will not be very good. The EBITDA margin went down to 28%. They were planning to be in the mid 40% in 2026. So here's a step back. 28%, I want you to keep in mind that is very good. You don't have a lot of business with an EBITDA margin of 28%. All their competitors don't have an EBITDA margin of 20%. So we're a bit strong about Napco, but 28% EBITDA margin, there is thousands and thousands of companies, of management who will dream to have this. Napco is a small cap, so of course, I will not say it's easier for them to get this, but keep in mind that 28% EBITDA margin, it's a very good level of margin. So for them, they believe it's a step back, and they are still confident, the way they talk, the words they use, that it will arrive at this level of margin, so mid 40%. Not sure about 2026 as it was planned, but they are confident that it should arrive. If it's not 2026, it will be 2027 or 2028. So they seem confident it will arrive around this. So to achieve this mid 40% EBITDA margin, they apparently need 10% growth in equipment sales, okay, and 20% growth in the recurring service revenue. And this was planned when they had 80% gross margin on the recurring service revenue. Now the margin is 91%, so they believe more than ever that it's still achievable, and they can get close to this 40-45% of EBITDA margin in the future. When it comes to capital allocation, so you have a dividend of 0.125 quarterly, so it's in line with the 2 last quarters, and they plan to start a share buyback program. They are confident about growth because they do it at a very good price. Okay, the stock decline a lot. So and also they seem confident about growth. They don't want to do too much buybacks. They have $100 million cash in their bank account. They don't want to do too much buyback because they may plan some acquisition in the future. So they want to keep a good cash position. Like the management says that they don't want to burn the cash. They want to keep some cash. So is it either because they are very careful, or either because they have no idea what to do with this cash? They have no idea of what the future will be. So you have to decide. I will recommend you to read documents and check all of this by yourself, because it's difficult from a YouTube video to explain everything, and also everybody will have a different interpretation of everything. But yeah, they have a lot of cash. What do they want to do with this cash? Are they able to manage it correctly? We don't really know, but they plan to do still a buyback program, so it's good, especially at this price, and especially with those kind of margins. When it comes to tariffs, some people have been asking for tariffs. They believe that most competitors get problem with tariff more than them. Like the competitors will have more problems than them about tariff, because most of them have finished products which came from China and Mexico, which really got hit by tariffs. So they should suffer more by this. Napco, they supply from Dominican Republic. Everything gets made in Dominican Republic, so they expect fewer problems. So we will see in the future, but yeah, like it seems that for now, getting things from Dominican Republic can be good for them and could profit them about tariffs, especially if the competition start to be more brutal in the field, if they need to do price competition and so on. The fact that they have less tariffs on their product, it could make people make company and so on, distributor, go to Napco instead of competitors. So it can be something good for the next year or 2 years. We will see. So the plan for the future, okay, they believe that they have better product than competitor. The CEO said it, So they really believe in this. The demand for product should get better during the last quarter and for next year. So the last quarter for them will be in it will be equivalent of Q3, Q2, Q3 for normal companies, because they start the year, like now it's a first semester for them, not first quarter, first semester. So yeah, they believe the last quarter for them, so the mid-year this year, should be better. They believe also they have good products and opportunity, especially with radio product, okay, the Starlink radio. We'll talk about it just after, but they really believe in this product. They insist that the bad results here are mostly due to bad timing and not bad product, bad demand and nothing. It's just a bad timing. A lot of events happen during the last quarter, during the last semester. That's what affected the result, okay? The thing that I'm questioning here, is, are they looking very actively for new partnership and not to depend too much on few? Because it seems that when you have 1 or 2 distributors that affect that much sales, are they trying to find new distributors? They say yes, but they don't talk a lot about it. I would like them to express a bit more what they're doing with distributor, that they're finding. They say they advertise. They say they're going to some Las Vegas event to prepare like to show the MVP system and so on. So maybe they should get more distributors, but it's something that we need to keep in mind, that they really need to work on having more distributors to not depend so much on 2 distributors for the sales, okay? So again, things should be better starting in Q4 from what they say. They may do some acquisition during the year or during next year. They contacted few banks to find them good deal to do with acquisition. So we will see how it goes. They insist on the fact that they don't want to rush into acquisition and that they want to do good acquisition. Okay, if there is something good, a good opportunity, they will go, but they will not go if there is not a really good opportunity, and they may prefer do dividend and buyback instead of acquisition if the opportunity is not good enough. They also have new products launch, okay, MVP Access, so it's cloud-based system for access control, Prima Napco, all-in-one security panel. This is mostly for mass market adoption. And Starlink radio, okay, here the goal is to continue the expansion. They really believe in this product, plus benefiting from regulatory shift, as they believe they have the best market, okay, they have the best product for the market in this. So we will see. For now, the stock declined 28%. I will not give you any sell, buy, or anything advice. You have the information here. You need to take a decision from all of this. You need to take also in consideration that they have these Fuzzy Panda allegations about trafficking their growth, trafficking the numbers, and so on. So you still have a lot of short sellers on the stock, a bit more than 8%, I think, in short interest. So you need to take care. You need to take care. It's kind of a risky bet. I will not put more than 8 or 9% of my portfolio on this stock, especially if you want to beat the market, but it can start to be a good opportunity. I'm not saying that it's it's the end for this company. I think it's far from this. I can see maybe some similarity with what happened in 2022 with tech companies that had less good result, okay, that have revenue decreasing a bit or getting a bit more flat, or have less EPS, less net incomes. Here can be the same situation, like a year of decline before getting back in the game and going more far and more fast in the growth. So we will see. I will maybe open a position in the next days after studying a bit more the business. If you want to learn all you need to know about this business, I did also a video that you can find on my channel, a full analysis on Napco. But for now, I need to really understand what's happening and see if it's a serious problem that will last long or if it's just few quarter problem as they think it is. And then if it's this, it can be a very good opportunity.